All right, time now for Wall Street Beat. We take a look at what's buzzing on Wall Street and the world of banking and finance. There's a lot to get through right now, so we're going to take a look at the select number of firms that are bringing in billions. Joining us now is Bloomberg's Sonali Basak, and you can look at, say, Jane Street doing really well. You can look at Ares raising a boatload for private credit. What are we seeing?
Yeah, let's start with Jane Street here because the market-making opportunity is fascinating. You did see the first half of last year be a little weaker, given that we had such strict volatility, intense volatility the years prior in different asset classes. But now the second half of last year is proving to be a little bit better. Why does that matter? It matters for Jane Street, of course, but it also matters for the banks that are set to report at the end of this week as well. One question that has been looming in the markets is how much share are these market makers really taking at the end of the day from these large banks? Of course, they're not subject to the same regulation as these banks. And also with all of the capital rules the banks are constrained to, these market makers, Citadel Securities, Jane Street, have been hiring a tremendous amount of talent across Wall Street. So these numbers are certainly staggering. According to our reporting, the $3 to $3.5 billion they're expected to take in the fourth quarter of this year. To put into context, that's as much as analysts are expecting from Morgan Stanley in the same quarter. Yep. So it is no small amount. And we have seen also Citadel Securities, 15 consecutive quarters in a row, bring in more than $1 billion. Clearly, these guys are looking to punch well above their weight and into the leagues of the largest banks in the United States.
Sonali, what are they doing right? How is this working? Is it just the current environment? If the macro backdrop changed, would it change as well? Is this a sustainable business model?
Guy, I'm going to cut you off there because I couldn't hear you.
Is it a sustainable business model? Is really the question.
It's sustainable until they are regulated, isn't it? If they face stricter regulations as well, then you have to wonder whether they can keep up these types of returns. On the other hand, they're not banks. They're not taking deposits from the everyday American, and therefore they don't require the same amount of regulation as a big systemically important bank. There's an argument to be made here, Guy, as well, that as the banks have been more constrained in many markets in becoming liquidity providers, that these market makers have provided a tremendous service to the market where a lot of people are worried about liquidity. One thing to watch this year is the presence of Citadel Securities, in particular when it comes to treasury markets and how much bigger they can become.
Let's just flip gears for 1 second. This is close to your heart here. So the CFA, we're not seeing a lot of people do it, right? We're seeing a lot of passive. And you got an MBA, which I know terrorized you for a couple of years, and not a CFA. Well, what's up with that?
There's a few things here. Do you need a CFA? Do you need an MBA? This has been a lingering question forever. What does it take to be a Wall Street Titan? The pass rate has dropped to 35%. That is lower than the historic averages that we have seen. What is going on? I will admit, I'll be a little self-deprecating here. I did my MBA. I got it in quantitative finance. I almost failed my last class. I needed 2 tutors to get through it. So
she was also working a full-time job, but let's put that on the sidelines for a second.
Switching jobs in between. But the big question about whether you do a CFA or an MBA, that you do either one of these to try to get a better job on the outset. One is a little more networking heavy, frankly. The other one is very technical, and it depends on how you like to learn. But it is interesting and concerning if you see these pass rates drop so low. Do you have students that start to get discouraged in taking it? This is for level 1. Remember, the level 2 exam takers will get their results next week, according to the CFA Institute. And so what happens if those rates remain low? Will more people want to take level 2 and onward? And yeah, I mean, remember, there's a whole other set of securities tests that you need to take that are required at certain banks for different functions as well. So again, it helps. It's cheaper than an MBA, I will say that as well, to take the CFA, and it's worth your time in terms of learning a lot of skills that you may need across the course of a life cycle in finance, but it is challenging, and it looks like it's getting more challenging for people by the day.